how big is or how are you seeing the size of the kind of merchant acceptance market, and how is it trending over time?
Yeah, it's interesting. So I think like when we look broadly at the world, right, there's $120 trillion in B2B payments, right? And particularly like the recurring subscription space is about 1.5 trillion. So I still think we are of that massive market space, but we've definitely seen, I think in the same way that the numbers showed it in the last year and a half, you see that chart just go like that for B2B payments. We've seen something similar with our business as well. And I think it's a lot of kind of companies coming back to, I think in 21, 22, there's a lot of hype around payments. Obviously, it died down for a year or two, and we've definitely kind of seen that come back. Where I think a lot of companies are taking that stablecoin payment project off the shelf, and stablecoin payments are in a much better place than they were, I think, 3 years ago in terms of just infrastructure. I think that's really helping kind of push that surge right now.
And one thing that folks who don't necessarily spend time with merchants don't necessarily realize as much is all the various different payment flows that occur within a business. So once you've accepted from the customer, those funds then have a range of different outcomes depending on what is your next obligation, whether that's paying payroll, whether it's out or paying taxes, lots of other different flows. And so merchant acceptance or the receipt of funds from the customer is kind of the beginning, but there are lots of other ones. And so, Bernardo, what do you see from Trace Finance perspective as the key flows that you're seeing? Are they merchant-driven, other corporate-driven, retail? Could you just more?
Definitely. So all of our customers now are businesses, right? So we are doing the B2B, but sometimes you add the C at the end, so you also have B2B2C. So we are powering a lot of companies like the local, which are PSPs, and end up processing money for Temu, for Airbnb, for Uber, and so on. But we also power some merchants directly, and I actually have an amazing use case with Dollar App to share, where now in Brazil, you're seeing a lot of foreigners that go into Brazil, but for them to actually pay with cards, it's so much more expensive. So with Dollar App, you can have USDC on their wallet, and since Dollar App is connected to Pix through us, they are able to off-ramp that USDC into BRL through Trace, and we pay then merchants. So someone goes with USDC in Brazil, and they can pay any merchants in the country. So that essentially means that someone with a USDC balance can go into now emerging markets and pay for a bakery when they are having coffee, having a bread there, like croissant, and the owner of the bakery doesn't accept stablecoins, but he is, right? So we are seeing more and more of that flow actually happening. We are doing millions of dollars every day on just that flow. So essentially tourists wanting to pay with stables or with USD based balances into Brazil. And for those that don't know, and that's very true to other payment systems around the world, if you're a foreigner, you don't have a bank account in the US, you can't really access Zelle. The same holds true in Brazil. When you CPF, you're traveling there, you can't really get into Pix, right? But those smarter use cases really allow the connection of previously not connected systems in a way that now you can have stablecoins in the flow of funds and people spending stablecoins. Similarly, how you would have them with cards, right? With like MetaMask, with Cash, with many other use cases.
Yeah, I think that's a great distinction to make. We talked about merchant acceptance as the use case where consumers are paying at the merchant and the merchant is able to receive their funds, but there are multiple ways of achieving that, right? We talked about how you can enable the merchant to accept crypto directly, or you can off-ramp before the merchant accepts crypto. And really, I guess it's about integrating with the existing, reducing friction as much as possible. And I think Acctual knows a lot about enabling your customers to have choice when they're accepting and receiving payments. So could you talk to us a little bit about the merchants and the businesses that you see and how their choice plays into how they're using Acctual?
Yeah, I think Bernardo touched on it best, and it really just comes down to translation, like you were saying, but also figuring in process and workflow. So we work with a lot of B2B businesses, and as of lately, it's increased a lot more. But table stakes for them is, you need to have the financial workflows that are important to them, because you're battling against the wire, right? if it's easier to send a wire versus sending out a stablecoin payment, they're not going to look at you. And what we try to do then is try to meet them where they're at, especially if they're sending an invoice. For example, actually two cool use cases. One is like a coffee exporter. They're based in Kenya, and one of the things that really mattered to them was you're getting all of these bulk orders. These guys are paying with USD, but they want stable coins, but as a form of sort of holding value, but wanting to off-ramp as much as they can. But the key thing for them then came down to QuickBooks and wanting to manage their inventory and offloading a kilo of coffee every time that it's bought. So with our invoicing, we sort of integrate into QuickBooks directly. And the other side of it is, this one's a little bit more weird, but it's a remittance company. They're licensed in the UK and Colombia. And folks will go to them, they want to send money back home, and these guys are taking USDC once they have Euro, for example. But there's thousands of people that they need to pay out. So they use us for like one-click payout with their USDC. And we have a couple of partners that pay out COP directly to them. But for him, it's saving hours. So it's really meeting them where their process and workflow is a pain point. And then, like you were saying, like translating it to what matters to them the most.
Yeah, I think that's a really good point. We talk a lot about the technology and yield and the blockchains that they're on, but in the case of the merchant, you just want to sell your goods or your service. You don't want to add additional headache and additional steps and have to learn a new method. And so being able to integrate it in their workflows, whether that be software or just making it simple and so that they don't even know that they're accepting crypto is super key for adoption. But given that we are here and this is like an educational session, I do want to get into the technical details of like how this works. So Jeff, maybe you could explain the different ways that folks who enable merchant acceptance with stablecoins might work, just so the audience has a sense for the kind of technology that you have, particularly for just regular payments, but then subscriptions.
Yeah, for sure. So I think really the impetus for creating Loop kind of came out of some frustration with Coinbase Commerce, which itself is a great product for like one-time payments. Right? And so I think there's an element of doing that, but kind of wrapping it within a nice solution or a nice wrapper, and then also kind of putting that within workflows. I think to your point, Momo, that that's actually seems simple, but it's super important, right? And how does that flow into other systems? At Loops, we have that offering as well, but we also we provide recurring payments, so really allowing you to do auto pay. So one of the big challenges, right, on file to pay for our Netflix every month, automatically just pulls funds from our card or our bank account that's on file. So we design an experience that feels exactly the same, but with crypto. And so underneath the hood, what's happening for those, and I explained it better on the EVM side than the Solana side, so I apologize. But we do recurring on both sides of the house. But essentially what you're doing is you're delegating authorization to a smart contract to be able to pull funds from a wallet on a recurring basis. And so then the end wallet holder can continue managing that authorization over time. On the EVM side, it's a token allowance. It basically gives control to the user to manage this allowance, but then for the merchant, they don't have to worry about every month going and doing that follow-up. So it really saves a ton of time, reduces churn. So we've had companies that come to us, and that's really one of the big headaches is, hey, we're managing this process of having people send funds to us every single month, and it's a real pain. It's killing our revenue. So that's really where we can add a lot of value.
And what are the key benefits that the merchants are looking to accept crypto?
Yeah. So I think whether it's one time or recurring, I mean, one thing is really just access to a global customer base. And I think that's something when you look at it's roughly like 80% of the payers who are using Loop are outside the US. So we see a lot of infrastructure analytics sides like RPC providers like Helios, Anchor. They're using Loop, and that really gives access to credit card, right? Or they're on-chain builders. They have wealth on-chain. They're getting paid on-chain. They want to pay in stables, and so it gives them that opportunity to do that.
Are you seeing something similar at Trace? What are the types of merchants that you're seeing the greatest adoption with?
Yeah. So I think that for local payments, specifically in emerging markets, I don't see a lot of demands for paying with crypto, right? So a Brazilian going to pay for, and it's instant. So I don't really see someone on-ramping to a BRL-based stablecoin to do that. but there's a lot of demands for them funding their accounts in an exchange abroad, or funding their accounts at Robinhood, or another, like, let's say Weibo, or another broker, or using other services that are foreign but that service the Brazilian population, right? So we see the same thing with Argentina. You have people that just want to have a dollarization of their balances and their investments as well. But really, I think that the gateway for people to get into crypto, into using services abroad, now is a lot more, it's a thinner line, in the sense that before you would actually have to go to a bank, you would have to onboard with them, you would have to tell them why you're sending $50,000 abroad, and now you can essentially on-ramp into, let's say, USDC, and you're doing it, and you're sending that to 5 different platforms, right? So we see demand for stablecoins on the B2B side. So let's say they have balances with us, and now they want to move those balances into their HQ, but they still don't know if they're going to have that in the US company or the European entity. So they would much rather have that in a easy to send means. So if they had it sent via SWIFT to their bank in the US, they would have to go through a couple hurdles to send that money back into Europe, and really explain that to a lot of their banking partners. But if you have those in USDC, you can settle 10K to the US HQ, and then you would also send 20K to the European one and 20K to your Asian one, or even do split payments on stablecoins. So you could pay the merchant in stablecoins or give them a balance there. So what we are seeing, even when the end user pays with locally with BRL, the foreign merchants will want to on-ramp into stables to be able to have that in a more internet money fashion, where you have more easiness sending that back and forth versus actually having to go through legacy rails.
Yeah, I think that's our use cases that doesn't get talked about as much, because it's confusing for most people who don't run into global treasury. And even those two words together go over most people's heads. Definitely went over mine the first time I heard it. Treasury, what does that mean? It's just like managing cash. And as you said, you explained it really well. You've got local collection. You don't want to hold local currency. You don't know, or you're not ready to send it back just yet. You don't want to hold it locally. So you end up having an offshore dollar account, but you now have these internet offshore dollar accounts in wallets like Privy. Good for them. And other means where you can essentially hold dollars until you're ready to repatriate back to headquarters. So I think that's another good use case of, the full life cycle of a merchant. You're not just accepting once you've received it, you've got onward payments to make, and particularly if you're a global business, you need to pass it back up the corporate tree. Next question for you as well, Momo, with respect to the different merchants that you're seeing. Circle just IPO'd. USDC is all over the news in the West. From your vantage point, what do you see your businesses using between USDC and USDT, and what do they use it for?
So in the beginning, it was a lot more USDT, but in LATAM, we're starting to see a lot more USDC. But the way that they're using it is honestly just to move money in between. And I say this because it was exactly what Bernardo was saying. It was like, there's somebody who wants to accept something, and then there's the translation issue around what they can accept, what their central banks will take. In Colombia, if an exporter wants to accept funds, typically they'll have it paid out to their Panamanian compensation bank account. Then they'll send it over, and then that will be converted to pesos, right? So stablecoins do make that translation a lot easier. And I think the model that all of these guys love to hear is, faster, cheaper, but does it settle the next day? Some of the objections and questions that you'll get. But I guess more around your question, it's almost interesting. Global South is mostly USDT, and USDC is starting to catch up, at least with more of these established businesses that have more finance teams, because now they start to get curious around, oh, okay, well, how do I do this? How do I manage my treasury? I mean, even with the crypto companies, like Circle is a customer of ours. They're going to have to manage their treasury, right? It's they're putting it in Fireblocks, they're holding it here, but now you have all of these finance teams. Okay, I need to pay in USDC. There's so much processes around. I pay in dollars, so you have to figure out what their process is there too. But I think, just to be frank about it, it's mostly USDT that we see on our side.
What's your prediction of how the trend will develop over time in LATAM? Do you think Circle will win share?
Honestly, I feel like whoever goes on the ground and wins the hearts of the people will probably win. That means working with the smaller players, supporting them, but also working on an institutional level and working with those players to honestly just have it blend into regular day life, and nobody knows what's going on. Yeah.
Very diplomatic answer.
Thank you.
Excellent. Very well media trained. What about you, Bernardo? What do you think will happen to the share of USDC versus T in LATAM?
That's awesome. Putting me in a hard spot here, but we are backed by Circle, but I really find it really interesting on the merchant side, where you're getting the acceptance through cards that are backed by stablecoins, but also on the other side you have the merchants also accepting crypto. So you could argue, are we going this route or this route towards adoption? We are actually going through both, which is amazing. On the USDT side, I think it still is very dominant in Latin America. Moreover, because it's really about, moreover, on the off-ramp side, what do they accept? So for the most part in China, for example, they're accepting USDT. So if you're thinking about Hong Kong USD, they are usually accepting USDT versus USDC. So it's not that it's a non-compliant flow, but it's more that the off-ramp partners there are more used to accepting USDT, or there's even like a slight premium to it. So the idea here is whoever controls the off-ramp, and it's not really about the adoption in Brazil or Argentina or Colombia and so on, for Circle or Tether. It's more about where they are off-ramping that specific stable. And it still holds true that for the most part, that's Tether, that's USDT. I think that the one that eventually wins is the one that is able to make those off-ramp partners or the payments players like Trace to use more USDC over Tether, to use more USDG over USDC, and so on. So I think it's a lot of work that each one will have to do, but to this day, it holds true that Tether still dominates. I would say 90% of the market.
Awesome. Yeah, great insights on the off-ramping there. And then a question for you then, Jeff, on where you're seeing adoption going. Like, what does it take to unblock further adoption growth? What are the key drivers?
Yeah, for sure. I think for us, I kind of boil it down to like 2 or 3 things. I think one is just like education around like what does it take to actually accept stables. I think Stripe, to their credit, is building the stack where it's kind of a one-stop shop, right? And I think pre-crypto in the sort of fiat world, you're a startup, you want to start getting paid, you just go to Stripe and like plug in your bank account. They've got Stripe Atlas, it plugs into QBO. We have to kind of get to that place, and I think a lot of like building the tools to get there. But I think that's a big thing. We educate a lot of merchants today, and like they're like, hey, we want to accept stable. It's like, all right, do you guys have a wallet set up? Like, how are you thinking about custody? What's your setup in terms of accounting, finance, et cetera? So I think that's a big piece, and just like really packaging that tooling. I think right now there's a lot of disparate tools in terms of like when you're trying to start getting paid in stables, where you've got to think about maybe a subledger for accounting. You've got to think about the merchant acceptance side, wallets, et cetera. So and then I think just like the last piece of that's like, not that I'm any expert on the regulatory side, but I do think that will help unlock a bit more interest just from companies where I think are just hesitant to sort of go on chain because they're not quite sure what does the world look like there. And I think a lot of us are kind of trying to build like the compliance playbook too for companies of just how do you manage on-chain finance at this point. So.
Right, and I agree that with the regulation piece as well, like just opening up the market to a lot more players, but also risks increasing the number of stablecoins that are out there that are used for some of these things. How do you think about handling that proliferation of stablecoins, and what ways are you hoping the market will fix that problem?
It's a good question. I feel like I have a less strong perspective than maybe these guys on like kind of which stablecoins or which ones went out. We've been kind of agnostic to it, I will say. And we're not backed by Circle, but we are a bit more of a USDC shop than I would say USDT. We're driven a bit by like our geographies and the chains we support. Like we don't like we're actually starting to support Tron, but that's just a space where I think obviously they've dominated the USDT space. So like on Solana and the EVM world, it's a little bit more USDC. For us, we don't necessarily, I think, not as concerned about like if there's 100 stablecoins versus 2 that really dominate. It's I think it's easy for us to sort of add those in our infrastructure. So that's less a concern. I think it'll be more about like how do we just make sure merchants have the tools to, if they do have to accept 20 different stablecoins, how do you help them like off ramp those really efficiently or settle those or push those to some type of treasury account? So I think that's where some of the complexity might come in.
Awesome. So just wanted to open it up to the audience. If anyone has a question for the great panelists, we've got another couple of minutes. Raise your hand, we'll pass you a mic, and you can get some insights live.
Thank you. Thanks for the panel. I just want to ask, how do you feel about the end game of stablecoins? Like, as you said, there's multi players on the table right now. There's 100 stablecoins. So what about the end game? Is that like only USDC and USDT and algorithm stablecoin will exist, or like multi players will exist?
I think that Tether, they won a lot of market share. For a long time, they were the only one, right? You had Paxos as well, which was also doing stablecoins with Binance, for example, BUSD, but they held the most market share. But if you actually look at Circle and USDC and Coinbase on the consortium as well, they were able to catch up pretty fast. They are not near Tether still, but if you see the growth on USDC, it has been amazing. I do think there's space for more stablecoins. I see a lot of players now doing like kind of like white label stablecoins, and you have like M0 and other protocols as well. So necessarily the needs to accept a specific stablecoin, and a lot of the providers that do the on-ramping, off-ramping are agnostic towards what you give them, and they accept everything. That won't really matter much. So as long as all the providers of the off-ramping, the on-ramping, and also the payment layer is able to accommodate through features a lot of those different stablecoins, then it could, in the sense that you would have thousands of them and people wouldn't really care which one top ones. But I think that for mainly consumers, they would a way to essentially have their balances in USD, even though it's a stable coin, and then they don't care really, or they would likely flow into either maybe USDG gaining grounds, or other players like launches a stablecoin. Do you think that people that use iPhone wouldn't use the native stablecoin that Apple has? I market share pretty fast. So we are very early into it, although we think about Circle, and we see now Gemini and like other players also. A lot of people are thinking and will think, oh my gosh, that was so early compared to we are now. And I could see the same about Bitcoin and crypto, right? And now it's only going downhill. And now we have Bitcoin that's over 100K. So I think the crypto markets helped a lot. And the stablecoin markets will really become mainstream. I think we wouldn't really differentiate stablecoins from doing cross-border payments or from essentially, it would be just part of daily life and moreover for businesses. So the adoption is crazy. In my opinion, we are already over 1% of global payments on stablecoins. And I wouldn't say someone would be lying if they think in the next 2 years we'll get to 10, 15, 20% of those payments. It just makes sense.
So I kind of have a hot take here on this one. And my perspective is more so coming from just some of the customers we interface with. I do think stablecoins have a strong use case in emerging corridors primarily. But there is more of a go-to-market and a liquidity issue in those markets and compliance too. If you put all those three things together, what you start to see is when you're talking with these customers, they'll bring up their volumes, they'll tell you what they want to do, but the issue then becomes, do you have enough liquidity? I think Tether does that very well. I've seen them go into these markets, injecting liquidity, supporting players that are on and off ramping, and then the appetite increases because the word of mouth spreads. And then there's the compliance issue. It becomes very difficult to onboard a lot of these customers because regulatory issues aren't very clear in some of these emerging markets. And I say this to say because I think once you start to onboard these businesses in the places that need it the most, where they want dollar access, then you start to see the word of mouth spread amongst itself, and a lot more businesses start to emerge. Like Dollar app has a good use case and what it's doing, but there are other businesses too that are very good at on and off ramping, like Trace, giving people the accessibility that they need. In my opinion, I think whoever wins the go-to-market race between Tether, Circle, whoever it may be, and just setting up shop and starting to support a lot of these businesses that are serving these use cases, because I mean, there's a lot of them, then you start to see clearly who the bigger player is. I get some folks want to work with banks, but you have to start somewhere. And if it's Nigeria or if it's Colombia or if it's Brazil demanding it, and then it's the smart business decision to make there. And I mean, some of the things that when you hear about Tron, for example, you start to hear in the markets in Turkey, they have stores with Tron all over it and partners who are selling USDT on Tron for local currency. So personally, I think it's go-to-market, liquidity where it matters, and compliance and regulatory so you can actually onboard people.
The challenges, in terms of like overcoming the instant payment issue at the local level, like, that's some of the challenges. And also you talked about, the adoption will be very high if there is an interest in dollarization, like, dollar interest and things like that. So given these challenges, segment, and also some of the things that, that there are will be success factors.
So I guess you guys have seen recently Jack from Airwallex talking about the stablecoin use case and how Airwallex is already able to do instant payments cross-border, and it's a most businesses, they don't have access to that necessarily, and also were able to do, let's say 5 years ago, an instant payments business, and your cost is 1 basis point. The same pricing as they would have with another player, but it would be instant, let's say. In that case, now I think that's with them being able to choose from and to do the off ramping and the on ramping without having to rely specifically on banks. Swift or whatever you're doing, as long as it's legal or safe, right? I want to pay cheaper. I want to have instant payments. I want to have a better service. Hence why the local is now the general idea here is who gets the benefit from that transaction, and improve the experience overall. There will always be demand for that. So it's really about, instead of the banks charging, it's the customer getting the access to the 20 basis points charge.
Consumers who are using the same app to go spend in Brazil. You've got the Kenyan coffee export. To always ground the benefits of stablecoins or any technology really in what is the delta between what is now possible versus what came before, and that way you don't make comments like the Airwallex CEO focused on EUR and USD where the thank you.
And we got
you have it in a lot of Europe, pretty much what I say.
But Bitcoin is more volatile than US dollar.
So back in 2017, we actually did cross-border trading. Okay. And it was madness, right? Sometimes it would be 10% up, 20% down. But that's
Yeah, that's why I'm thinking like you will work with an on-ramp partner and local stablecoin has like they can do that as a finance or whatever. Against
maybe euro. I don't know. But
well, Europe it has been dropping for years.
yeah, no, I
That's
know.
why it's almost 1 to 1.
But it's hard to say. I mean, I think. Yeah, definitely.
Here's the invoice.
That is the future. That's how it should be, right? Honestly, it's what they tell us, right? So when it comes to developing the product for us, it just really becomes a matter of like, well, who has the liquidity, right? And then it's more of a direct sale.
Do you only use Telegram or do you use LinkedIn or WhatsApp?
LinkedIn, WhatsApp.